What's up, everybody? Welcome to the first Bandit FX Podcast, and today we're going to be talking about gold. I'm here with my buddy Matt Jimenez. If you guys don't know Matt, I've known him for about 3 or 4 years now. He's the one who actually got me into trading Forex originally, so I got to thank him for that. And Matt, if you want to just give a little intro on yourself.
Yeah, well, first of all, pleasure to be here. You know, it's always good to be on someone else's podcast, especially somebody that I got involved into financial markets. So it's a very heartwarming feeling to see someone that actually took it serious, because I've taught many people and I've showed many people the ropes, and only quite a little bit have ran with it, and you definitely have sprinted with it and maintained. A lot of people fall off, so I applaud you on that, and I'm just happy to be here and speak in front of your audience.
Yeah, I appreciate that. All right, so as far as gold goes, we're currently sitting at around $1,700, $1,740 to be exact. We had a big sell-off last week towards the end of the week on Friday at the end of the day. But enough with like small-term technicals, really. I don't really care where gold is going in the next 6 months, the next year. I'm talking about the next 10 years from now. This is what this podcast is going to be about. So one thing I want you guys to know is that gold recently made an all-time high in 2020. So in 2020, I think we peaked at just under $2,100. It was around $2,079, I believe. But in 2011, we also peaked and made the previous all-time high, and that was at $1,923. So basically, gold, as far as being a store of value, is that still valid? There's a lot of key points that I want to go over that really question gold's validity as a store of value at this point, especially with Bitcoin now being another option versus just precious metals and things like that. So at this current moment in time, the rate of inflation with the US dollar has actually surpassed the growth rate of gold. Now, what that means is if you had held gold at the all-time high in 2011, 10 years later, if you sold your gold at the all-time high of $2,100 or $2,079, you would actually have less buying power than you did in 2011. So this brings into the question, is gold still a hedge against inflation? Yes, it is, to a degree of, you will lose less money, but now it's starting to get consumed due to the inflation.
Yeah, so you have a good point there. One of the things that I would highlight out of everything you just said is you're still going to lose money, but less money. It's a very odd way to put it, because when people have fiat in their bank, they don't feel like they're losing money, but when they go to buy stuff 10 years down the line, it's not the same. You're not going to be able to purchase the same amount. So whether you see the same dollar amount in your bank account or not, its value has changed. Maybe not the dollar amount, but the value of its power has changed. So he's basically highlighting how if you were parked in gold rather than fiat, you would still lose a little bit, but not as much as if you were in fiat currency.
Yeah, definitely not nearly as much.
But the biggest takeaway from this whole scenario of inflation consuming gold and whatnot, the biggest takeaway for me is it just extremely highlights the pure manipulation when you have a financial market. It really demonstrates the powers that be. I'm speaking on banking, of course, because at the end of the day, as soon as something becomes a market and they're able to do what they need to control prices, it'll happen. So it's really just showing the standard of, wow, look how manipulated markets are. We have inflation at this pace at 16%, but gold is not reflecting that. Why is that? Well, the answer is because it's heavily manipulated over in the futures market. You have people taking out, not people, I should say banks, and you have large funds taking out crazy contracts that they could not deliver on just to suppress prices and whatnot. So that's what I would have to say. Is it overall, this just shows how manipulated things are, and nothing that you think they don't do, they're doing it. Like, they're in all the markets and they're manipulating all the prices because they can.
Yeah, definitely. And one really good example of that was last year when coronavirus actually hit. A lot of people were buying a lot of gold and silver, and the differences in the spot price and the physical price were like almost astronomical. So basically, what ended up happening is there was such a scarcity and such a low supply of physical gold that, these people selling the gold were actually charging a much higher premium on those metals versus the actual spot price. So you were paying over spot price for metals, physical gold and silver.
Yeah, that was a crazy time. I remember when that was happening, I was getting DMs left and right. What do I buy? What do I buy? What do I buy? And I was like, well, see, everybody wants to wait for the symptoms to happen rather than get it done before the symptoms. It even goes into like health. People wait till they're sick to go to the doctors rather than getting checkups before you're sick. So that's the same thing with investing. When it comes to investing, you need to position yourself before the symptoms occur. So I was screaming to the hills, buy silver, buy gold, buy silver, buy gold, buy silver. I felt like a broken record. And then when shit hits the fan, everybody wants to go buy. But little do they know, you already have a fever. You're already sick. The symptoms are already there.
Yeah, it's already too late. You're already there.
You're already sick.
So another thing that is really interesting about gold and where we're at right now is that, up until now, gold has always made an all-time high, and it's been significant. It's been double the price, or at least like 30, 40, 50% higher. This recent price discovery that we've been in, where we've only made a high just about above $200 off the previous high, is really interesting because before that, gold never had any competition. So it would just continue to make new and, much larger highs than the previous. But now we're starting to see the growth of gold, slow down a little bit. And I think what that has to do with a lot is, the new generation of people and young investors choosing Bitcoin over gold, because you have Bitcoin and, a lot of people consider it as digital gold. And there is still a large group of people, especially in the older generations, that, they don't trust Bitcoin. They don't know a lot about it. They're like, oh, gold is the only thing they've ever known. So they're sticking with gold. Now, you got to ask yourself, what's going to happen when those older generations get phased out? When those people die and, all the wealth gets transferred into these younger generations, what are they going to pick? Especially because of how young they are. They've been exposed to digital things their whole life. They can order a sandwich, they can order an Uber, anything right off their phone. They can call somebody from across the world, FaceTime somebody across the world. Everything's been digital. You got kids playing Fortnite that are familiar with V-Bucks. They're familiar with getting paid based off of making YouTube videos. They're making money just off of creating digital content online. So the whole digital aspect to them is very familiar already. So as far as a digital currency, I don't think they really question it too much, compared to a lot of the older generations that, don't really believe. They feel like it's nothing. They feel like Bitcoin is not anything real. It's not because it's not tangible and they're not used to it. So they're pretty skeptical still. But basically what I'm getting at is I think a lot of the younger people now are going to be choosing Bitcoin over gold. So Bitcoin is going to be taking a lot of that market share away from gold. Gold right now is a 10 to 11 trillion dollar market cap. So there is a lot of money in it, and Bitcoin is just cracked $1 trillion this year. So we're talking about 1/10. It only has 1/10 of that market share. What is going to happen 10, 15 years down the road? Is gold still going to have that momentum to push up and continuously make new highs when the money's being sucked out of it?
Yeah, so you do have a great point. I agree with everything you're saying, but I do like to play devil's advocate. At the end of the day, gold does have the longest track record as an asset of all of mankind, as far as we could date back. So, to just phase gold out I like to play both sides. One side of me is like, no way, you can't phase it out. It's been here before us. And then the other side of me is like, it most certainly can get phased out. It's not keeping up with the times. But then again, when times change, people, become innovative. So there may be a way to create a digital gold. Bitcoin has taken that title, and maybe that might catch traction as its use case. I mean, I could find 500 other use cases. I'm extremely bullish on Bitcoin, but I like to play both sides. I like to take everyone's arguments and then formulate my own. So, I mean, you are right. People, the older generation is phasing out. They are not as fond of Bitcoin as the younger generation, but the younger generation is going to be here longer than the older generation, and that's just facts. So whether Bitcoin is able to infiltrate its name into the store value case or the currency case, I think it's very highly probable. Do I see gold leaving and just becoming obsolete? It's hard to say, because that's never happened,
Yeah, it definitely hasn't ever happened. But one possibility that we definitely could see in the future, 10, 20 years down the road, is gold returning to a value that, we really haven't ever seen before. Not dollar-wise, but as far as what it's gauged on. If it does end up not being used as a store of value anymore as time goes on, what is its value going to be? What is gold used for? Well, it's still used for jewelry. It's still used for computer chips. It has a huge use case physically, besides just the fact that, it is known as a store of value. But one thing I want to touch on a little bit more as to the reason of why this is so important right now, in the time we're in, is the currency crisis that we're in, and, the stock market, and how everything is artificial right now. Nothing is really real. So you have the stock market basically breaking all-time highs at a point where nobody was working. A lot of businesses were closed for almost a year. So how is it that these companies are reaching record highs just simply off the fact that nobody was working? Everything was shut down.
Yeah. I'm really happy you brought that point up, because I talk a lot about the deviation between the stock market and the economy. Back in the day, back in the early 1900s, you used to have the stock market reflecting how well the economy is doing. But what's happening right now in the 21st century is you have a complete opposite of the both. You have the stock market doing great, meanwhile the economy is in shambles. So I like to call that the big deviation. And what's funny about all of that is now all these companies, these larger companies, and you have these CEOs becoming uber rich, like ridiculously rich, to the point where people can't even fathom that number that a human can own. If you look back in the days, like the richest person have like a few million, and then eventually got to the billions, and now we're in the trillions, and now we're gonna head towards the quadrillions. We have two people that are tinkering in the trillions back and forth, which is absurd. But what I'm getting at with this is what they're doing also to not only inflate the stock market. These larger companies on their balance sheets are absorbing tons of Bitcoin. So to put this into like a layman term is like, imagine you have a company named Matt, right? You have a company named Matt, and this company Matt is worth $5 million, right? That's what they are worth. Now this company Matt invests 50% of their net worth, which would be like 2.5 million, into Bitcoin. So now they're buying Bitcoin as an asset on their balance sheet as a company. Now with the increase of the Bitcoin price, by default, company Matt is getting an increase in their valuation, which will reflect in Matt's stock prices, in his shares. So even though these companies are not actually turning profits, even though these companies are trying to scale to a profit rather than work towards it, they're showing great returns because of their investments, not so much of their revenues. If you look at the financials on a lot of these companies like Tesla, Airbnb, all these companies that went public, they actually some years don't even turn a profit. Financially, they don't look like they would ever sustain anything. But now what they're doing is reinvesting. They're doing share buybacks. They're buying back shares of their own thing. They are literally just monopolizing and just becoming so inflated, and their financials are not reflecting that. So that's why you have these crazy prices.
Yeah, and on top of that, you really got to think about, where we are as an economy. The interest rate is at an all-time low. It's 0.25%. So how is it that we're at such a basically like pivotal point to where we have to lower interest rates so much, basically zero, and hand out stimulus checks over and over again to get people to spend money in the economy because everything is closed, yet you have the stock market at an all-time high? Typically, it's either one or the other. Either the stock market is at an all-time high and everything's booming and, interest rates are higher because everybody has money, everybody can spend money, business is thriving, the economy is thriving. Or you have low interest rates to incentivize people to take out more loans, to spend more money. That way you can, basically jumpstart the economy and get it rolling again. But now you have two things that are happening at the same exact time that, really don't make sense. So you start to question, is this a legitimate economy, or is everything overextended? Is this a bubble? Is this a big bubble that's just ready to pop?
It's most certainly just a big bubble that's ready to pop. And back to the interest rates where you first took up, where I left off, is we have interest rates at extreme lows. Well, if you guys don't know, interest rates are, when you look up the Fed fund rate, that interest rate is what the banks have to pay back towards the Federal Reserve. So if you were to just take that into consideration and realize, all right, why is it so low? Well, it's because they're broke. They cannot afford to pay higher interest rates. If they could, they would. But they don't have savings. No one has savings. This whole system is built on debt. This whole system is built on borrowing. So how can you pay a higher interest rate when everything you have is borrowed? You can't. So that's why interest rates are so low. And if they even think about raising them, everything will come tumbling down because no one can afford it. Literally, the banks cannot afford it. It's beyond you and I. It's beyond the small people that can afford it. It's the larger institutions that cannot afford it. They will no longer want to borrow money from the Federal Reserve because they can afford that rate. So that's my take on the interest rates. And if they do raise it, everything will come tumbling down. We are literally at like the end of the road.
Yeah, exactly. And for those of you that aren't really sure how interest works, and I'm not talking about just as, somebody borrows money and have to pay back more. Interest isn't real. Interest is a made up idea. And what I mean by that is that, say there's $100 in circulation, right? There's been $100 printed in all of the U.S. economy. 10 people take out a loan for $10. So now, if that bank charges those people 10% each, or we'll just say 5% each, right? Each person is charged 5% on that $10. They now owe an extra 50 cents each. How is each person going to pay back the $10 and the 50 cents of interest when there's only $100 in circulation? So what ends up happening? Prices become inflated and the Federal Reserve has to print more money so those people can pay back the interest. It's a never-ending cycle. There has to be more money created to basically pay back the debt that was, it's debt and some. It's debt and you owe me a little bit more because of the time you took to pay it back. When, think of it as like a balance sheet. Interest, that actual money can be paid back. Say you borrow like $10, right? And you're charged 10% interest, you owe an extra $1. That bank is giving you that $10 to borrow. What you have to pay them back is an additional $1 in exchange for time. Now, on a balance sheet, you can move $1 back and forth. You cannot move time. Once time happens, that's it. It's gone. So that's where you see the imbalance on basically interest rates and how it just keeps continuously inflating the economy more and more. Because interest is a very, very complex subject, and it's overlooked a lot of times, especially when in regards to fiat currencies and how they basically by default will always be worthless at the end of time. After a certain length of time, as long as there is any debt or any interest charge, any fiat currency will be worthless.
Yeah, I mean, if you just go through history, you could probably just Google it. Actually, I don't use Google, DuckDuckGo or something.
Yeah.
But anyways, whatever floats your boat, just Google it, and you'll see that no fiat currency has ever beat the test of time, should I say. They've all gone to nothing. They've all debased their currencies. It's because the creation of it is inherently tied to self-destruction. The birth of a fiat currency, the moment it's created, it's tied to a debt. Not tied to anything else. Not tied to a labor or goods or none of that. It's tied to debt. And when they use the people as sweat cattles to pay off this debt.
That's one way to put it. But yeah, and a lot of people don't really know the fact that the U.S. dollar has not been around since the beginning of the United States. We've had several.
70 years? How long?
1913.
Yeah,
a little bit over 100 years.
Yeah.
But we've had multiple dollars before this, and for those of you that don't know, the Federal Reserve is not part of the government. They are a third-party, basically, entity that the government has an agreement with to print their money.
Yeah. I'm trying to think of a quote. I forgot who said it, but he said, "Give me control of the money, and I care not what the laws are." Something like that.
Yeah, as long as you control the money, you control the people.
Yeah, you control everything. You win. Game over, And just backpacking off of that, they're never going to give up their power. So, this currency, this paper currency is for sure going to be worthless. But what are they going to do to remain in power? Well, what I believe is they're going to transition to a cashless society, which we already see. A lot of places don't have change. A lot of places say no cash accepted.
Yeah, there's a national coin shortage.
Yeah, exactly, right? But they're not going to give up their power. Whether this currency lives another 10 years, 20 years, which I doubt, they're not just going to step down and be like, all right, give it to the people. Let's give them sound money. I don't think that's going to happen. What's going to happen is they're going to incentivize people to give in their dollars so they could go on a new system. And this new system would probably be something along the line of like a Fed coin. I'm pretty sure you've all heard it, right? And then with that, they're going to be able to have programmable money. So like if you're a bad citizen, you're not allowed to spend for a week. Or if you said something bad about so-and-so, now you can only spend $50 for the week. Oh, you're not listening to these laws? All right, well, your salary just got changed. And that's now how they're going to control the people. So that's already happening in China to a certain degree. And what's to stop it happening here? There's nothing stopping it.
Yeah, exactly. And, even if it doesn't go to, even that extreme, you got to think about it as a digital currency. If the U.S. economy ends up coming out with a digital currency, now the IRS has a data log of every transaction that will ever happen. So a lot of these people, whether you're like a nail tech, hairdresser, anybody who gets paid in cash, a barber, somebody like that, or if you're a waitress or a waiter who gets tipped a lot, you're not gonna have any more cash tips. Everything, including your tips, is gonna go on that data log, and you will be taxed for it, whether you like it or not. I'm pretty sure you won't even be filing your taxes anymore for the most part. I mean, there will be a few things you have to input on, but it'll almost be automatic, because they'll know exactly what you made. They'll know exactly what you spent. They'll already have that algorithm in place to tax you automatically.
Yeah, I mean, taxes in general is just legalized theft. I mean, if you just jump back several years, taxes were only used to raise money so the government can afford going to war or afford things. Now, they never gave that power up. So like they would have taxes to raise funds, like a stock going public, right? An IPO. The government would basically have an IPO, raise all this money in war bonds or all these other yada yada things, tax everyone. But once they reach their goal of their funding, they take the tax away and let the people build their money back up and get back on their feet. Now the government just doesn't want to give that power back, and they're abusing it, and it's just, now it's normalized. Theft is normalized. And that just is because the millennial generation is just completely ignorant to the fact that times were not always like this, and you just need to be aware that things were not always like this. You need to do your research. You need to be aware of how things used to be, because now they're trying to rewrite history. They're actually taking down monumental statues and things that resembled pieces in human history that people could jot back and say, this happened. Now they're taking all those down in the name of things like races, in the name of things like inequality or whatever it may be. But really, they're just trying to rewrite history and just not have that a part of history. And another way they do it is they say, well, we don't want to remember the bad. Well, guess what? There is no good without bad. You can't have one without the other. So what they're doing is just brainwashing you, and they're doing it in front of your face with an excuse of your safety.
Yeah, so they're basically just trying to remove the education, or basically, you learn from the past, right? So if there is no history and there is no past, and there hasn't been any bad things that are taught, or at least people are informed about, then when it does happen again, or a government or a large entity tries to push something on a group of people or a country, they're not aware that it's even happening. For example, how is it that we have a virus right now with over like a 98% survival rate that is closing down businesses? It's closing down the economy. It's like almost like it's the end of the world. Meanwhile, the swine flu was around a couple years ago, and there was no lockdowns. The bird flu, same thing. There was no lockdowns. It wasn't like the end of the world, and I mean, you got to think about it. Obviously, there is a risk, to some degree medically, it is a bad virus, right? But there are, protections that are put in place. If wearing a mask and social distancing fix the problem, why are businesses still closed? Why is that? Why can't people return to work? So you got to really question the whole scope of things. But we went off on a pretty deep tangent there about governments. But as far as how this ties into gold, basically is what we're trying to get is there's a lot of uncertainty in the world right now. There's a lot of new changes happening, a lot of crazy things happening. So especially in currency, especially in governments, currencies, interest rates, things like that, you have to protect your buying power, because everything is going to be stripped from you if you just keep your money in your savings account in your bank. You're earning not even, 0.1% of interest.
Not even.
It's ridiculous. You will be eaten alive by inflation if you keep your money in a bank account. I mean, it doesn't work anymore. There is no, I don't even know why banks have savings accounts anymore, because there is no saving. You're just losing money. You're losing buying power. So, basically, at the end of the day, you just gotta, protect against inflation and things like that. And, we just really wanted to give a very different side of an approach as far as where the new store value will be as far as Bitcoin or gold, and gold being the only asset that has withstood the test of time. It's been around for hundreds of years. It's before we were here, gold has been a store value. So why would that change? There'd have to be something that's much, much better that just fits in with technology that would, replace that. But it's been a very interesting conversation.
I want to touch on one more thing really quick, though.
Yeah, go ahead.
Because in my personal life, I get the question nonstop: do I buy Bitcoin? Or where's Bitcoin going? And the only thing I could say to these people, and I feel like a broken record, hopefully this might be my last time, probably not, but it's okay. I accept all questions. If you want to buy Bitcoin, you need to go through a few questions. The first question is, why are you buying it? If you're buying it because you want a short-term gain, then you're probably going to get wrecked, and I wouldn't suggest you buy it. If you're buying it as an insurance policy against inflation, then by all means, don't stop buying. if you're buying it because you want to be a trader, there's other markets that you could learn that aren't as volatile that will give you a better learning edge than an extremely infant market like Bitcoin. It's still in its infancy stages.
Yeah, we're in price discovery still.
Exactly. So you're going to be trading a market that, I mean, it's doable. I'm not like trying to crush you here. But why, if you're a newbie, why would you want to learn on something that doesn't have a proven track record, really?
Yeah, exactly. I mean, even with gold is still pretty volatile to this day. You have huge price swings on gold.
Yeah, so to me, those people, the question is, do I buy Bitcoin? The question is, are you short-term or long-term? If your answer is short-term or, I don't know, I want to make money, then no, don't buy it. But if you want to buy it because long-term and you want to be invested for 10 plus years out, by all means, I'd be buying too.
Yeah, especially, in this day and age where you have a lot of new people coming into the financial markets, a lot of people that are inexperienced and really have never really dealt with anything like this. They just, they see it on social media and they think it's cool and they want to do it. Hey, I can make money without doing anything. Well, no, you're not doing anything. All the work that you're putting in is in the research and, everything you do behind the scenes before you actually make an investment or take a trade or whatever it is. People who are traders or investors, they don't just throw their money anywhere. They're sitting there, they're researching this thing. They're working every day to make sure when they do put that money to work, that money is giving them the best return possible. Whether it be for a reason to protect against inflation or, just to make a daily cash flow from a business, like whatever it is that you're putting your money into to have your money work for you, you have got to make sure you do your research first. I can't stress that enough.
One more thing. I know the last thing was supposed to be the one more thing, but this is the second to last one more thing.
Go ahead.
Dude, I can't get over how many questions I get also for altcoins. All right, so me and Victor have been in crypto since like 2016.
Yeah,
we've been we've been heavily involved in crypto, and we've seen boom and bust. We've seen the hysteria around it. We've seen the sentiment shift from bullish to bearish to unknown. We've seen all different sentiments. That gives us a little bit of an edge. But one thing that I've learned is when I first got into it, I was all about altcoins. I was all, this altcoin's going to do that, and that's going to do this. Yes, I'm not saying that they're not, but at the end of the day, Bitcoin is really the one that we need to be paying attention to.
The store of value.
Not only the store of value, but when push comes to shove, and let's say the government do want to crack down on an alternative currency, who are they going to crack down on Bitcoin?
Exactly. There is no creator.
Yeah, there's nothing. So like, if you're looking at alts and push comes to shove, there's the finger to be pointed. Like, you could find the source easy.
Exactly. You could find the source and shut it down. With Bitcoin, it's fully decentralized, and there is no one point of access or one way to shut it down. There's no for say like a plug to pull. There's no plug because it's everywhere.
And people always go, yeah, but what if they ban it, Matt? Okay, that's fine. They could ban it. That doesn't mean they stopped it. They ban a lot of things. Legal things go on every single day, every single second. They ban hundreds of things. They ban weed. People smoke weed every single 10 minutes. Every 5 minutes. So when it comes to Bitcoin, it's like, okay, they could ban it, but what's going to stop me from getting Victor's wallet address and sending it via Bluetooth? Like, who's going to stop any of that? You cannot stop the network. You'd have to pull the plug on all the internet, but then you wouldn't even have access to your own money. So then you're just eating your own words right there. And I get that conversation all the time.
Exactly. So it's been a lot.
There's been a lot. It's going to need a round two.
Yeah. So as far as, assets and where they're headed, gold and Bitcoin basically in the battle for who is the king. It's going to be interesting to see where we move moving into the future. But my next podcast will be strictly on cryptocurrencies. I'm going to have my buddy Jake hop on with me. We're going to have a whole discussion about all cryptos, not just Bitcoin. But thanks, Matt, for coming.
Yeah.
For those of you who don't know, his name's Matt Jimenez, and I'm going to have his social media description, all the links to his social medias in there in case you guys want to link with him, connect with him, talk to him. He is very, very informative, and he's very, very intelligent when it comes to financial markets. He taught me most of what I know already, so definitely go check him out.
And you're following Victor because he's ahead of the curve, right?
I hope so. All right, guys. Well, this has been the first episode of the Bandit FX Podcast, and I'm looking forward to seeing you guys next time.
Yeah, well, thank you for having me on, Victor. I look forward to potentially another episode. And if you guys made it this far, thank you for listening. Hopefully I see you guys on the digital world, Instagram, YouTube, wherever it is. Take care.